Steve, REIT shares essentially lagged in 2025. So what are your expectations for 2026? And you can base them on some of the earnings we've had recently.
Yeah, thank you. Earnings season, we're about halfway through earnings season, and the forecast for 26 earnings are fine. They're up 5 or 6%. So good earnings growth, good visibility, and a number of the property sectors in the REIT universe have pricing power. So it's a good setup for 26.
And will REITs benefit from the rotation trade as money comes out of the Magnificent Seven? Will it go into REITs as well?
Great question. And well, REITs are up 9.5% year to date. So we're off to a good start. There's a number of investment classes that are benefiting from the rotation trade. But REITs are benefiting from it because we have virtually no exposure to AI and the whole technology and the whole bubble question. So we are up 9.5% year to date with good valuations. And last year, as you mentioned, in 2025, they're essentially flat or up 2%. So very attractive valuations coming into 26.
And will they benefit from the reshoring trade, the manufacturing reshoring trade? There's a lot of trades out there. What about this one?
Sure. I mean, that's the current administration's been talking about reshoring and building America again, whether it's for defense, whether it's for the supply chains. And the REITs that own industrial properties are seeing a pickup in demand for industrial leasing from domestic manufacturers. So we're in the early stages of the reshoring or the bringing it back, build it in America trade. But the U.S. industrial REITs are starting to benefit.
Which property sectors are doing the best? There's multi-home, you have commercial, you have strip malls. There's a lot of different ways to buy property. Which ones are going to do the best in 2026 in your view?
Sure. Well, so far, and based on fundamentals, we're seeing a number of sectors have pricing power, meaning they can raise rents higher than inflation. We're talking about retail, we're talking about senior housing, we're talking about hotels, and we're talking about data centers. So all those sectors demand is greater than supply, so they have pricing power. Industrial REITs, which did see supply in 24 and 25, are starting to see a pickup in demand, so they're seeing some improving pricing power. So we're excited about that. The apartments or rental properties, it's sort of a flex. It's supply equals demand, not much pricing power. But as we move through the year, there'll be less supply in apartments, so pricing power should improve in 27.
Can you just describe, there's for sale and then there's rental. Which one do you like? Which is better for investors?
Sure. This year, the apartments are down probably 1 or 2%. They don't have pricing power. There's a little bit too much supply. In terms of for sale or housing, home prices, the current administration wants to do something to make buying a house more affordable. They've tried supercharging Fannie Mae and Freddie Mae in terms of getting the spreads lower on mortgages. And they're trying to encourage home builders to be more proactive on their pricing for the price of a home. The issue is that prices are high to buy a house because prices have gone up and incomes haven't kept pace with the price appreciation. And secondly, it's hard to turn on the spigot and create new housing for sale. It's just not that easy. And so we think affordability will still be a challenge, unless mortgage rates really drop a lot, but we don't see that.
And then finally, what are your thoughts on government, both in Washington and here in New York, getting involved in capping rates or capping prices or freezing rents? Does that scare a lot of investors out of the sector?
It doesn't necessarily scare them, but what it does is it reduces supply, so that doesn't address the affordability problem. I think both here in New York, they talked about capping rent increases, and maybe in some other markets. And the issue is it doesn't really address the affordability issue because by capping the ability of the landlord to raise rents, it disincentivizes them to increase supply. So you're not increasing more supply, which is the best way to increase affordability.
All right. Well, thanks for coming on and talking about it.
Thank you.